Hello traders, welcome back to Explain the Charts, your go-to destination for insightful financial market analysis. Today, we're delving into the USDCHF, the US dollar versus the Swiss franc, to unravel the latest trends and trading opportunities. The news surrounding the USDCHF is mixed, reflecting the overall uncertainty in the global economy. The US dollar has been weakening recently, driven by lower Treasury yields and rising odds of Kamala Harris winning the US presidential election. The Swiss franc, on the other hand, has been strengthening due to moderate inflation in Switzerland and the Swiss National Bank's potential interest rate cut. While the US economy is showing signs of resilience, geopolitical tensions in the Middle East and concerns about the upcoming US election are creating market volatility. Let's turn to the charts to see what technical indicators can tell us about the future of the USDCHF. If we look at the one-day chart of the USDCHF, we see a clear downtrend from the recent highs of 0.9226, which was reached in late October. The price has been steadily declining, breaking through key support levels along the way. One notable support level is the 0.8600 level, which was tested in late October and early November. The pair has now fallen below this support level, suggesting further downside potential. We can also see a pattern of lower highs and lower lows on the chart, confirming the downtrend. Looking at the one-hour chart of the USDCHF, we can get a more granular view of the price action. The downtrend is clearly evident on the one-hour chart, with the price consistently moving lower. We can see that the one-hour chart is confirming the break of the 0.8600 support level, which we observed on the daily chart. In addition, we can observe several bearish engulfing patterns, which suggests a continuation of the downtrend. The one-hour chart also indicates that the bears are currently in control, and the price may continue to decline in the short term. Let's narrow our focus to the 15-minute chart, which provides even more detail on the price action. Here, we can see that the bears are currently consolidating their gains around the 0.8650 level. The price is trading in a tight range, with little volatility. However, it's important to note that the 15-minute chart shows a bearish divergence in the RSI, suggesting a potential reversal. The RSI is trending higher, while the price is trending lower, suggesting a potential loss of momentum for the downtrend. This divergence could signal a short-term bounce in the price, but the overall downtrend remains intact. The current news and market sentiment suggest a short-term bounce in the price of the USDCHF is possible, but the overall downtrend is likely to continue in the long term. The bears are in control, and the price may continue to decline, especially if the US dollar weakens further. However, a short-term bounce can't be ruled out, particularly if the US dollar strengthens or if the Swiss franc weakens. We'll need to keep a close eye on the 15-minute chart and look for signs of a potential reversal before we make any trading decisions. To recap, the current price action in the USDCHF is indicating a downtrend, driven by weakness in the US dollar and strength in the Swiss franc. Key support levels to watch are the 0.8600 level, which has already been broken, and the 0.8500 level, which could offer some resistance. The 15-minute chart shows a bearish divergence in the RSI, suggesting a potential short-term bounce, but the overall downtrend is likely to continue. Traders should be cautious and wait for confirmation of a reversal before taking any long positions. To stay ahead of the curve, traders should monitor the news closely, particularly any developments related to the US presidential election, geopolitical tensions in the Middle East, and the Swiss economy. Additionally, traders should keep an eye on key economic indicators, such as the US Treasury yields and Swiss inflation data. Remember, the charts are only a guide, and traders should always use proper risk management techniques and never invest more than they can afford to lose.